What's the number one way to become a real estate investor in today's market? The reality is that most people think to become a real estate investor, you either need a ton of money, a ton of knowledge, or a huge hedge fund, something to that sort in order to get into the real estate market. And when it's really, really simple, most real estate investors or real estate millionaires started out purchasing their very first property as their primary residence. And that primary residence turned into an investment property after they purchased their second property, after they purchased their third property, whatever it may be, and over the course of 30 years, paid off the home and now had, say, $1 million in equity in that property. Throughout the way, there's different ways of using your primary residence to acquiring your second, your third, and your fourth property. So in order to get into real estate in today's market, if you don't own a home already, the simplest way is to just go out and purchase your first property, your primary residence, and start to leverage that property over time to buy your second, third, fourth, fifth, whatever number of homes. The reality is that you don't need to go out there and find the best deal. What you need to find is something that you're going to be comfortable in, something that you can make the payments on, and over time, that property turns into your very first investment property that you purchased. And people are asking me, David, when's the best time to buy? When's the best time to purchase a home? The reality is really, really simple. When you're able to purchase a home, whether the rates are high, whether the rates are low, that's when you should purchase a home. You shouldn't say, hey, I'm gonna wait 6 months, 12 months to see if the market goes up, if the market goes down. The reality is that you buy today, so you have to marry the home and you just date the rate. So if the home's high and the rates are high, maybe you purchase the home that you like, purchase a home that'll work, take the rate on temporarily, and in a few months when the rates drop, in a year, 2 years, 3 years, you go ahead and refi that home, get a lower interest rate, drop that payment, hopefully built up some equity over the next few years, and then you're able to move on to your second, third, fourth, fifth property. If you want to be a first-time real estate investor and you're really not sure what's the right property or how do you find a property that's cash flowing in order to make it a good investment for you, the reality is that most properties you buy initially aren't incredible cash flowing properties. You actually sometimes have to get creative and turn them into good cash flowing properties. Let's give an example. You buy a property that has a $3,500 a month rent and your mortgage is $3,500. A lot of people say that property is not a good investment property. It doesn't cash flow what I want or what I think is a good investment property. But then David comes in, he says, okay, well, that same property on Airbnb can possibly bring $5,500 a month because of the nightly rental method, right? So I'll purchase the same property, I'll put it on Airbnb, and instead of cash flowing $3,500 a month in rent, now I'm cash flowing $500 or $5,500 a month in rent, making it positive $2,000 a month for my pocket. So you need to look at all of your options and get a little creative sometimes and figure out if it's not cash flowing what I want, but maybe it's the right price and maybe I'm able to get into it. How do I turn it in to a cash flowing property that makes sense for me? Make sure you follow, like, subscribe, and share with all of your friends if you found today's video helpful.